All right, welcome back, everybody, to another deep dive. Before we start, liking, sharing, and subscribing, that does help the channel grow, so we do appreciate that. But, yeah, today we're going to be doing a deep dive into a pretty wild story. I think you would agree with that, right?
Absolutely.
Kind of a battle of the titans in the crypto world.
Yeah.
We're talking about FTX and Binance. FTX, of course, the company that just completely imploded. And the founder, Sam Bankman-Fried, currently behind bars. And now there's this lawsuit alleging some pretty shady dealings between FTX and Binance.
It's really interesting because it exposes this sort of underlying tension that's been there for a while, I think, like almost ideological. You've got FTX on one hand, sort of embodies this move fast and break things ethos, which is common in the tech world, but maybe not so much in finance. And then you have Binance trying to be the more, stable, regulated player. So it'll be interesting to see how this lawsuit plays out because it could really shape the future of crypto.
Yeah, so for anyone who needs a quick recap, FTX was founded by Bankman-Fried, as we said. He's currently in jail. Binance led by Zhao Changpeng. They were major rivals in the crypto world. Back in 2019, Binance bought a stake in FTX.
Right.
But then fast forward to July 2021, they were negotiating to sell it back.
Yeah, a share buyback, which basically means a company buys back its own shares from the market. So in this case, Binance wants to sell its FTX shares back to FTX.
Okay.
The lawsuit filed by FTX's administrators alleges that FTX's own investment arm, Alameda Research, funded this buyback with tokens valued at US $1.76 billion. But get this, Alameda was allegedly insolvent at the time.
Wait a minute. So they were trying to buy back shares with like nothing?
Well, it's not exactly nothing. It's these tokens, these digital assets within the FTX ecosystem. But the lawsuit is saying that Alameda used these tokens to artificially inflate their value, knowing they couldn't back it up.
So how is that even allowed?
Well, that's the big question, right? That's what the FTX administrators are trying to get to the bottom of. They're saying this whole transaction was basically illegal, and it cheated FTX's creditors out of a ton of money.
So they just want that $1.8 billion back.
That's right. They want that money back plus damages.
Wow.
And, this has huge implications for individual investors who might be wondering, hey, are my crypto investments even safe?
Yeah. I mean, what's Binance's response to all of it?
Unsurprisingly, they're denying everything, calling the claims meritless and saying they're ready to fight it out in court. It'll be really interesting to see how their defense strategy plays out. Because if they lose, this could set a major precedent for regulation in the crypto space.
Yeah, and I think this is what makes this whole thing so fascinating.
Yeah.
It's not just about FTX and Binance. It's about the future of the entire crypto industry. It's exciting.
Absolutely.
There's so much innovation happening, but it also feels like the Wild West sometimes.
Yeah, and that's the thing, right? This case really highlights how the rules are still being written, and that creates a lot of risk for everyone.
So what do you think are some key takeaways for our viewers?
Well, I think the biggest one is the importance of due diligence. Before you jump into crypto, do your research, understand the risks.
Yeah.
Don't just blindly follow the hype.
This is why we do these deep dives.
Exactly.
Trying to help people make informed decisions. And I think this case really shows that even the biggest players in crypto can be vulnerable.
Yeah. No one is immune to risk.
All right. Well, we'll be keeping a close eye on this case as it develops, and we'll be sure to update you with any major developments.
It's going to be a wild ride.
But in the meantime, stay informed.
Yeah.
Do your research. And as always, thanks for joining us for another deep dive there.